Hello, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today, we'll be looking at the current events influencing or impacting the markets. We'll try to understand the economic calendar and where the markets might be headed. Once we go through that, then we also go through technical analysis to understand the prevailing chart patterns and hopefully understand where the markets might be headed. So as usual, I always try to give a disclaimer. This is not investment advice and it does not constitute a recommendation to trade. It's purely educational, so you should always do your own analysis and at the same time, make sure you practice proper risk management. So before we make any progress, I would like to begin with a mic test. So if you can hear me clearly, kindly type hi on the live comment section, and these will confirm that everything is working just fine. So let's begin, and kind request for anyone who is joining the session, kindly like the video. This might help someone else who might be looking for similar content on YouTube, and hopefully they'll be able to find the video and get to experience what you are experiencing. So, hello, Richie. Hello, Billy Kamau. Hello, Karani. Thank you guys for joining the session. Let's get this started. So first things first, I would like to start with something new I want to implement on the series. This is a chart of the day. So every single day, there's always one chart that is most interesting than all others. This is according to my own view, nothing to do with your research. Maybe your chart of the day will be different from mine. But then that's the markets. That's the nature of the markets. So the chart of the day today is the Nikkei 225 index. So this is the 4-hour chart. And as you can see, we are basically cruising over multi-year highs. So this is the highest that we have seen the Nikkei 225 index trading ever. It's not the highest price it has ever reached, but as per my trading career, this is the highest I have seen the Nikkei 225 index cruise. So from the weekly chart, this is how it looks like. So we are on the verge of a second consecutive bullish week. And if you look at these, you will notice that last month we had a multi-year high, and we are just about to close above that. So on the 4-hour chart, this is how it's looking like. So if I zoom out, you notice that we have an ascending triangle where the swing lows have been getting higher and higher, whereas the swing highs what we are seeing is the market being on the verge of breaking the previous high that was just witnessed 2 weeks ago. So just a moment. So if you think about this clearly, you notice that from the high that we saw over the last 2 weeks and the high of last week, then we have an what I would call a symmetrical triangle, which happened to be broken earlier this week. So from the 1-hour chart, it looks like this. And if I zoom out, this is the exact pattern that we have. So market making a swing up, swing down, swing up, swing down, then swing up, then breaking above this trend line and making a very strong and impressive rally all the way up to the previous high. So now that this opportunity has already passed and the market is now testing a new high. So the key question is, are we going to see a new break and the market continues higher, or is the market going to bounce off this resistance, which serves as the highest price we have seen in the year, and of course, the highest price in the month and higher than last month. So just to give this some perspective, we have something similar to this. So market is forming higher lows. Highs tend to be equal. Eventually, the market breaks and makes an impressive leg up. So this happened a couple of weeks ago. So towards the end of December, then from New Year, we had this strong rally happening the Nikkei 225 index. So from here, the market entered some form of consolidation or accumulation zone. And now we seem to be having yet another breakout, which implies there is a strong likelihood that we could be seeing yet another high or yet another rally. And if this happens to be true, then there is a good chance we'll be seeing some further upside. So sorry for that. So hello, Manti. Hello, Jeff Kipe. Thank you for joining the session. So can you like this, like the video? All you have to do is click like, and this will help the YouTube team to identify that it's a good video, and hopefully we will get all this video. So with this being our chart of the day, then there's quite a convincing push to basically speculate on some further extension of this bullish rally. And from the fundamental perspective, there's quite a number of things that have been happening. So the first thing I'd like to highlight, sorry for that, is that the Bank of Japan has been holding interest rates very low for quite a lengthy period of time. I think over about 2 decades. And interest rates have remained low at around 2%. So having some challenges with my article here. Just give me a moment. Somehow my article won't load again on Reuters. Just give me a second. Let's hope that this one opens this time. Okay, now I have to play the puzzle. Second time. Third time. Okay, I might have to forget about this. I think it's just wasting our time. Okay, I'll share the link with you guys. Hopefully it will be able to open on your side. Can't even share the link. All right. So the summary of the article is pretty simple. So this morning, the Bank of Japan Deputy Governor has literally mentioned that he is, or the Bank of Japan is not looking to implement rapid rate hikes. So a lot of market participants have been expecting the Bank of Japan to implement rate hikes. So he has mentioned that there's a good likelihood that interest rates might remain significantly low for a period of time, and that the Bank of Japan is looking to reduce its quantitative easing program. So what this means is that a lot of investors who have been betting that the Bank of Japan for rate hikes, they are now disappointed, and the bets on the yen recovering have really gone up. So on the other hand, the stimulus that you've been seeing in the Japanese economy have been pretty strong, and that is set to start reducing in preparation for rate hikes. So perhaps we'll be seeing these in the third or fourth quarter of this year. So what this means is that there will still be easy money in Japan, and that is one of the reasons that is fueling the strong rally in the Nikkei 5 index. So as for the yen, we are seeing a continued weakness. So if you look at the performance of USD JPY this morning, then you notice how the dollar has really strengthened against the yen. So we are just about to beat this major resistance, and there's a good likelihood we will be seeing some further upside happening in USD JPY. So while the Nikkei 225 index seems like the chart of the day, also the USD JPY currency pair seems to be a very interesting pair to observe, looking for trading opportunities. So what we have seen is something you can track along this line here. I would say that this market was literally just going downwards. So if we were to plot this as our flag, then you can see that the market was going up and down on the forward chart for about 2.5 weeks before it managed to break towards the upper side. So the break didn't last for long. It was literally held at resistance. Then the market pulled back down, retested the trend line before bouncing strongly. And now what we are seeing is a potential for strong momentum upwards. So it seems more likely that the market would be breaking above this resistance today and head to the next available resistance. So in this case, if you zoom out this chart, you notice that there is a potential that the USD JPY could rally to the previous high, and a potential for a move like this one seems quite likely, especially considering that the Bank of Japan is not looking to hike interest rates, whereas the US has basically promised that to try and hold interest rates high for the foreseeable period until inflation subsides towards the 2% target. So with interest rates remaining high in the US at 5.5%, but Japanese interest rates holding very low at negative 0.1%, then this becomes more likely trade where the US dollar continue gaining against the yen, recover some of the losses it made earlier in November, December last year. And now this means moving all the way up and getting to the previous high. So this has been the story of the year. Since the beginning of the year, the 1st of January, we have seen just the dollar cruising higher and higher. We had these 2 weeks where we were trading in the flag, and now we have broken above the flag, and the expected continuation is as follows. The target around 151.697 price level. So as for the dollar index, we have seen a strong momentum since last week. So this strong momentum ended here. Then on the first day of the week, further upside momentum, second day of the week, pullback, and yesterday a very muted price action. So from the 15 minutes chart, we can all observe that yesterday was not a very rosy day for any USD JPY traders. So you don't want to be participating in a market that is behaving like this. So in this case, it makes more sense to hold your hands, sit on your hands, and this basically means being patient, not executing any trades until you have a clear market direction. So we don't have a clear market direction yet, so we basically be patient and look for a breakout. It's more likely that the dollar index will continue strengthening. So after the pullback, you can see how the pullback lost momentum so quickly. So if you happen to see a strong dollar index continuing for the rest of the day, then this would set the tone for major market trends, especially for major currencies. So for instance, if we are looking at Euro USD, what we are seeing is something that we tried to predict in the last session, that after the breakout that the market would pull back and perhaps test this area before moving further back downwards. So this area was acting as a major support level. Since it was broken, what we are seeing is the market going back to test the area. So I remember highlighting this area with you guys. So this was the area that the market was finding as support. So after breaking and moving further downwards, you can see the market making a strong rally towards this area. The overall expectation is that the bearish momentum continues once the market retests this area. So looking forward to short the euro against the US dollar seems like the likely play here, looking for some further downside momentum. So in addition, this bottom here was a major support level. So we would expect at least the people who are shorting to be taking some profits here. And then the market bounces, finds resistance, and now pushes further downwards. So as for pound USD, the overall expectation is that the market will pull back, get to this area. And the main reason we were using this area is because it was acting as a previous support, now turned into a resistance. So to my surprise, this didn't happen. And as we all know, if we do such a speculation that the market will pull back and then drop, it doesn't mean that once the price gets to this point, you immediately go for a short trade. What it means is that once the market gets to this point, you start looking for evidence of sellers entering the market. So we don't have that evidence yet. We haven't seen sellers strongly entering this market, so there is no basis for going for a short selling trade. So what seems likely in this scenario is that the market is now going for another set of resistance level, now turned into support, and we can all observe these price levels here. So we have seen this support and this support, these and these, and now the market might be likely looking to retest this area before determining the next set of direction. So this now becomes the available area of interest where we are looking for evidence of short selling, and now we advance the idea from that level to yet another level. And if this plays out, then makes the opportunity even juicier. So I hope that makes sense to everyone. So for USD CAD, we have seen the Canadian dollar being pretty strong, and this has resulted in a big sell-off. So you are expecting to see evidence of buys here. Didn't happen. And now the market has overextended the bearish momentum, but then we are still looking for evidence of bulls entering this market. So from the forward chart, you can see we don't have anything clear. All these is indicating strong bearish momentum. So until we have something significant, then that's when we'll be looking for a bullish position. So it seems more likely that it will be happening from now onwards, especially as we enter the New York session. So if you happen to see stronger momentum coming in from these candlesticks, then this might indicate the reversal point and perhaps the idea to for a bullish position, targeting see price rally towards the previous high. So for now, we remain patient until this is clear enough, indicating that buyers are entering this market. So for gold, what we are seeing is a market that rallied, went to the resistance that we had identified here, didn't have any evidence of sellers entering the market. So it closed higher, but then started reversing. And now from the price action this morning, you can see the strong bearish candlesticks indicating bearish momentum and a strong. And as a result, now there is a strong likelihood that the price of gold will continue subsiding towards the previous bottom. And this is along this trend line. So a strong dollar is expected to continue with these trends. And you can see from the forward candlestick, we already have a strong momentum candlestick, even though there is a longer tail. So maybe the second candlestick will be a confirmation that bears are entering this market. Now it seems more likely that we will be pushing further downwards. This is as gold responds to a very strong dollar. So while this remains within a triangle, yes, you might enjoy trading a very short-term trade here. But then the most important outcome will be when the market breaks out of this triangle, started all the way in December. So the moment you break either the upper or the lower trend line, I bet there's a good chance of breaking the lower trend line. Then in that case, we should be looking to observe further downside momentum. So as for today, we are currently retesting yesterday's low, and we are just about to break that. And if we break that, you can see the previous day's low. So Tuesday's low is right here, and Monday's low is right here. And it's likely that gold will close through both, especially if we get some high momentum today. So as for AUD/USD, this sideways momentum or range happened for a while. Market dropped and then resumed in the same range before dropping further downwards. And now the attempt to make this recovery has completely failed, and there's a good chance we'll be seeing some further downside. This is all entirely dependent on a strong dollar. So the dollar breaking this range will be very important for any market participants who is looking to trade major currency pairs as well as gold. So a cruise above this level, and I think I overextended this. So any cruise above this level, I know 3.997, would mean that the dollar index is resuming bullish momentum, and that would strengthen against other currencies. So yesterday we saw the top US equity indices forming higher highs. So the Nasdaq went into another all-time high, and now today what we are seeing is some form of consolidation that started yesterday in the evening, and now the market is attempting to make a comeback. So what we are seeing here is some level of consolidation, and now the market is attempting to make a break. So if you see a break further back downwards, then trade short, and this seems likely after the market hit another yet all-time high. So we also saw something similar happening with the US30. So with the US30, this is what we experienced. We had two trend lines that were coinciding at the same point here. And this was on Tuesday. So we gathered that there's a likelihood that the market would bounce from here and rally higher. So on Tuesday, we saw this rally. Then yesterday, some further upside extension. But then it did not reach the previous high. So we didn't have an all-time high on the Dow Jones. But then the upside momentum was quite nice. So for anyone who participated in the bull run, something to enjoy. So what we are seeing here today is an attempt, especially as we enter the London session, where the market is looking to start potential back. So this is not confirmed yet. So it's more of a wait and see kind of scenario. But then after the strong rally over the last 2 days, it is within expectations that these overbought levels might start subsiding. So from the daily chart, this is how it looks like. So a very strong bullish momentum. And this is from the 1st of October last year. So the Dow Jones have been strongly bullish. So any kind of pullback has been taken as an opportunity to continue buying. But then the further upside the market goes, the lower the likelihood that the market will continue extending. So at some point, we expect some form of pullback. We have no confirmation for that. So I'm still very bullish on US equities. But then for very short-term trading, might want to monitor here to see if there will be a pullback or a continuation. So we just monitor these ranges for the Nasdaq, for the US30, and for the S&P 500. So after the strong rally that happened yesterday, what we are witnessing here is a market that is attempting to pull back downwards and perhaps even a break downwards. But then if there was to be, let's say, a big drop downwards, the idea is to look for bullish positions and continue betting on this long-term bullish trend. So for now, it seems like the market is pulling back. We don't have much volatility, so we just remain patient until we have a clear direction. So for Brent oil, we saw a big drop last week, all the way down around $75.565 per barrel. But then this week has started out to be very strong. So we have seen daily gains right from Monday, and now as we continue pushing higher, it seems likely that the next target will be this major resistance that we saw here. So a potential extension of this rally to $80.35 per barrel might be playing out. So this is something we discussed on Monday. So if you happen to jump onto this one, you're still winning on this one, and there's a good chance you'll get to this area. So European equity indices have maintained a strong bullish momentum, but then over the last couple of days, what we are seeing is some form of consolidation, where the market is now forming a rising wedge. So in this rising wedge, it seems like the market is losing momentum, and at some point, we might be expecting to see a breakout. So whenever you see a rising wedge at the top of a bullish momentum chart, the idea is now to look for a reversal trade because it shows you that the volatility is weakening, and the potential for a breakout is quite near. So in this case, what you expect is the market to go to the base of the trend line. The base of the trend line is right here. This is where the pattern started. So 4,610 might be the idea to look for, especially if you are a trader who focuses on the Euro Stoxx 50 cash index. So as for the French 40 cash index, we are seeing the market attempting to break this trend line after failing to bounce from here and get to the previous high. So after seeing this falling wedge, the breakout happened towards the upper side, market retested and pushed even higher. But then, judging from what we saw yesterday, it's quite clear that this market is now forming lower highs. So we have lower highs here, we still have lower highs, and the market is on the verge of breaking this trend line. So the trend line has been holding for quite a while. This is from the 16th of January. And now, if we happen to see a breakout, then an immediate target becomes just the previous low. This is the lowest price we have seen in the last week. So we could be seeing the market breaking below that level and cruising down to this area and even perhaps downwards. So the idea of the market bouncing and getting to this area is no longer tenable. So now we are looking for potential the market making a huge drop towards this area. So Bitcoin has remained strong and managed to break a familiar pattern. So we all know these consolidations, they happen each and every day. So once we do these analyses, you're able to identify them by yourself, even without my help. And what we are seeing here happening in the Bitcoin chart, we just try and simplify this. So this is our resistance. This is our support. And all you have to do is to identify the break and then trade in the direction of the break. So what we have here is a market cruising higher. And there's a likelihood that we will be seeing some further upside momentum coming in from Bitcoin prices, having hit $44,623 per unit of Bitcoin. So USDCHF has also closed above two major trend lines. So we have seen this resistance being broken, this other resistance being broken. And once the market broke above that, there was a retest and a continuation. And now we're expecting that the market would potentially rally to the top of the pattern. So the top of the pattern is right here. This is the highest price we have seen here. So if we happen to see a bounce from this area, would be seeing a rally to this area here, which was a previous high here. So if you have, let's say, multiple take profits, that could be playable. And of course, if the market cruises above that, then the top of the pattern is 0.88660. So having gone through that, I think it's time we also look at some news that we may be expecting today. Of course, if you have any questions, feel free to type that, and I will be responding to that right away. So hello, J's Code. I can see Jason. Good morning. Hello, Kevin. There was a request to check on Pound USD. I think we already did that. We already went to Pound USD. Hello, Noel. Thank you. Thank you for joining the session. Euro JPY, we have just analyzed the JPY and seen that it has really weak currency today. So even for Euro JPY, I would still be speculating for bullish momentum. But we have also analyzed Euro USD and seen the potential for the Euro losing against the dollar. So I would find a stronger currency to trade against the yen. And I think USD yen is a premium example compared to Euro JPY. So on the economic calendar front, where is my calendar? Yeah, it's right here. So this is what we're expecting for the day. We already saw bank lending coming in at a 3.1% in Japan. Current account getting to 1.1. From a previous peak of 1.89. REITs housing price balance for the UK at negative 18% is a huge improvement. And then Chinese CPI getting to worsen. And this means that Chinese inflation is getting worse and worse. So China has been undergoing deflation over the last couple of months. And now it has moved from a previous reading of negative 0.3% down to negative 0.8%. So the producer price index was previously negative -2.7%, has slightly improved to -2.5%. But then everything is pretty clear. What we are seeing is prices are strongly moving to the downside. So what is happening currently in China? We know that the People's Bank of China has been cutting interest rates over the last 1 year. And at the same time, the Chinese economy has been going through a rough path of recovery, especially after the COVID-19 restrictions. So as a result, a lot of manufacturers are betting on a strong recovery. So the accumulated excess inventory, but then this inventory was not going out as fast as expected. So in order to offload this excess inventory, the Chinese manufacturers have had to cut prices. We've already seen this happening in electric cars, where there was a huge competition between Tesla and other Chinese EV makers such as BYD, Li Auto, and NIO. And as a result, we saw a price war leading to these big brands cutting their prices in order to sell more cars. So this is not happening just in the EV sector, it's happening across board. And as long as more and more manufacturers are cutting prices, then this leads to lower prices across board, which basically leads to deflation. So the Chinese economy has been facing deflation. And if you look at any imports we are making in Kenya coming in from China, they are actually getting cheaper, despite the dollar getting very strong. So this is a bad condition. It's basically showing that deflation is getting even worse. And as a result, the overall expectation is that at some point, we'll be seeing some form of a stimulus package coming in China, a massive one, and with Chinese equities being relatively weak, holding somewhere around 4-year lows, then we should be expecting to see a strong rally coming this year. So this makes our projection for the next couple of weeks and months to expect some form of bullish momentum coming from Chinese equities. So far this week, Chinese equities have made some really good gains. For instance, if you look at the China A50 cash index, it's already up around 6%. So this is 6% since the beginning of the week. So if you look at the daily chart, this is what we are working with. So 2 strong days. This was Monday, Tuesday. So Wednesday, still bullish, slightly bullish, and today it seems like the market is pushing downwards, but the charts are clear. They have already broken above the upper trend line, and we might be headed even higher. So if I was to adjust my trend line here, correct, just the extreme prices here. So the highs have been getting lower, and now we are on the verge of forming another higher high, and we already have a higher low. Then it basically implies that there is a good likelihood that this strong bullish momentum continues. So whenever you see something like this, and I think today I've mentioned a couple of times about evidence of buyers entering the market, I think this might be it. So having broken above this trend line, we could be seeing some upside momentum happening for the China A50 index. And remember, this was a low that we experienced in 2022. And if I zoom out of my chart, you notice that the last time we saw the markets this low was way before COVID. So the lowest price we saw during COVID was somewhere around here, and you can see the market is bouncing from here. So this is a 4-year low. So there's a good chance we'll be seeing some further upside. And of course, if you look at other Chinese indices, including the Hang Seng index, you'll notice that since the beginning of the week, we have had some strong bullish momentum. I believe this is about 5% before the market erased gains, and now we are still up 1.64%. So the strong bullish momentum is expected to build from here. We haven't broken a major trend line from the Hang Seng index. So the bullishness might be premature for Hang Seng index traders, but the China A50 index seems to have already broken the trend line. And it seems like a likely bet to make a strong rally from there onwards. So we are still within this pattern, so there's no major breaks happening in the Hang Seng index. So as we continue for the rest of the day, we'll be looking at US weekly unemployment claims. So this will be coming up at 4:30 p.m. So remember, unemployment claims are basically an indicator of the job market conditions. So a tighter labor market will imply that it's more difficult for the Fed to cut interest rates. But then a softer labor market might pressure the Fed to cut interest rates. So in this case, the previous reading was 224K, and now we're expecting this to reduce to 101K. So when there's less and less people claiming for unemployment insurance, it basically means that the job market is strong. So unemployment claims were highest during COVID when a lot of people were fired from their jobs, their businesses were not doing well. So in that case, there was a lot of unemployed people claiming for unemployment insurance. So if you look at this, and I'm trying to change this so that it's easier to read, you can see that during COVID, March 2020, this is when we had the highest unemployment claims. So this has continuously reduced, and this is mainly because the US economy has really strengthened, created a lot of jobs, and you don't want this rising again. So in the last 2 weeks, we have seen the unemployment claims rising, meaning that job market conditions were softening. But then if you look at the overall trend, it has been consistently moving downwards. So if this is anything to go by, then you can see that there is some form of trend moving from here, then to here. Sorry, I'm using the wrong tool for this one. So yeah, we have some form of trend happening here. So it seems like the unemployment claims since 2022 have maintained this path. So they are slightly moving downwards on different phases. So a phase moving downwards, then upwards, then downwards, then upwards. But overall, it seems like the job market conditions. So that being said, the next data point we'll be focusing on is a couple of more speeches from FOMC members. So there will be a speech from FOMC member Bakin and FOMC member Bakin yet again at 8:05 p.m. Then the US 30-year bond auction. So at the same time, we'll be looking at the natural gas storage in the US at 6:30 p.m. Remember, yesterday's data included the crude oil inventories, which jumped higher by 5.5 million barrels. And this basically meant that supply of oil is increasing in the US. And if you look at the reaction in the market, and but in a major oil market, so in this case, we'll be considering UK oil. You can see that it slightly continued gaining, but this was after a big drop during the news announcement. So the news announcement was somewhere around the evening. So an attempt to go up was avoided. In this case, you can see the market attempting to go down. Then overall market conditions are indicating that there is more pressure to push oil prices higher compared to pushing oil prices lower. So there's still something to achieve, potentially getting to this target of $80.325 per barrel. But the overall direction seems to be downwards, especially considering that crude oil inventories are increasing. So that's it for the day. And thank you very much, guys. Thank you for your time. For anyone accepted my request to like the video, the live video, thank you guys. Thank you for your participation. And I hope to see you on the next session. Help me, I watched the previous live stream about interest rates and inflation, but I don't understand how it's affecting the NFP and CPI. Please help me. I don't think that's how it works. The interest rates do not affect the non-farm payrolls or the CPI. So it's all about the economy and the stability of prices, which is controlled by central banks. So central banks have various tools, including what we call the interest rate decisions, where they either hike, hold, or cut interest rates, and they respond to how the economy is performing. So in order to understand how the economy is performing, they observe major macroeconomic data. And the data they are basically observing is the job market. So non-farm payrolls is an indicator of the job market. And the consumer price index, or the CPI, is an indicator of inflation rates. So to help you understand this, kindly go to the FXPesa YouTube and then search for Novice to Pro series. It's a course that I designed for a trader to transition from a beginner trader to a pro level trader. And on this course, I have one specific episode that is dedicated to fundamental analysis. So in order to understand the relationships between interest rates, non-farm payrolls, and consumer price index, kindly watch that episode on the non-farm payrolls. Hopefully, this will help you understand it. What is the difference between market snapshots and market pulse? This is a really good question. So the market pulse is the one and only session that we are doing evening. So we understand that there's a lot of our listeners who are not able to attend the 11 a.m. sessions. So we created a special session for them where we basically cover what's happening during the evening. So today being the Thursday, the 8th of February, we'll be having yet another session that will be coming up at 8 p.m. So on 8 p.m., we'll cover a similar approach as what we do in snapshots, but then we try to expand the coverage, not just for the day, but also for the week, looking at what has exactly happened over the current week and trying to project what will be happening towards the end of the week, as well as the following week. So we have a much wider view. And on this special session, we try to cover as much as we can. So hopefully everyone will be able to join. So if you're not already subscribed to the channel, make sure you subscribe so that whenever you have a live session, you'll be notified and you will not miss out on a thing. So thank you guys. Thank you, Kimanzi, Noel, Brian, James, and everyone. Hope to see you on the next session. Remember, it's today at 8 p.m. Thank you.